Hey guys, it's Vic from Grasping the Market and welcome to our market briefing. Well, yesterday we had what we've been anticipating for some time now, which was a correction to the trend up that we're seeing. And we mentioned in our previous briefing that it was concerning the way the market extended prior to the holidays and holding those gains at all-time highs during the holiday break, especially on a low volume. That was very concerning, and well, most of that, all of that, was corrected yesterday on a very sharp move from the open. But I think it's important to notice that the uptrend that we've seen in the month of November and now December is still up, is still valid, still there. So the question now becomes, do we continue lower and build acceptance back below or towards this 3100 area, or there is an attempt to bounce back and retest those all-time highs? Nonetheless, the information that we have here is that we have no excess at the monthly level whatsoever, very little excess, which is only these few handles above yesterday's high. So we have a double distribution on the monthly, which is something very strong. It suggests that the market is not done to the upside. On the weekly, however, after 8 weeks of one-time framing up, that has been stopped with taking the previous Monday's low and actually closing that gap that was left there. So, I would say that with the key risk event for this week being the non-farm payrolls at the end of the week and the stance that we've seen from the Fed, which is now data, well, they call data dependent, and they will be looking very closely to that number. We could see a market consolidating ahead of that number, and that number could be the trigger for further downside or some support. So if we look at the closer picture on the market profile, you can see that the move was very sharp from the open. Obviously, yesterday a lot of participants came back from the market and they were not part of this rally that we saw last week on a very low volume. So when volume comes in, and also some people, it's possible that they are momentum traders, they join because this move was very emotional, they need to collect profit. So when volume starts kicking in and the move gets sharper. Now, something to mention as well is that you have a perfect B-shape profile, suggesting that after the initial push lower, there was an stagnation around the gap area from last week. So the focus for today definitely is on value development relative to this value area, this B, the fat portion of the B. Remember that the B suggests long liquidation because you have a strong move and then the market holds the area. Now what we want to see, when there is a more stronger move, you tend to see a trending market. So not such aggression, but extension, 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 and it's an elongated profile. This one has a perfect B shape. So what we want to see is if the market probes below, if there is any continuation, any follow through. So focus is on value development relative to the value area. If I open up this, you know that this pullback that we saw on the K period at 24.50, that would be the level denoting change to the upside. If you get acceptance above that, definitely something changed from yesterday. And the other thing that I would like to mention is that after the initial push in the morning, you left a very little excess, but you did some backing and filling on the F period. Try again on the GH, could not extend below that that marked high, and we could not reach the initial morning low, pullback with significant pullback, and then towards the end, some positions, I mean, you have some liquidation or some attempt to selling, and could not even reach the GH low. So you have a continuous attempt to go to the low, but doing a poor job every single time. So there is a possibility that the market could be temporarily too short, and if that's the case, you could see some correction now to the upside. Remember that when you have a B shape and then you have a B shape next to each other, that means that the market is or sometimes that discloses that the market is on a balancing mode. Last data point that I would like to mention is that we have now a prominent POC, and well, it is an indication if the market opens and do not go there to retest those prominent POC, because yesterday POC was very decent as well. If we don't retest this 3118, 3116 area, that signals that the market is weaker than expected, and probably you will have a further downside move. There's still some time for the market to open, but that's what I will be paying attention to. So yeah, I mean, keep your eyes open, manage your risk wisely, and let's see what the market brings. Having this prominent POC, I mean, settlement, I have not checked exactly what's the settlement figure. I will do that in just a second. Give me 1 minute. So the settlement is at 31.14.25, which is somewhere 14.25. Oh, exactly here. You see that the overnight is kind of balanced. You have a prominent POC and it's kind of balanced. Normally, when you have a balanced overnight, that tends to be a precursor for a directional move. So let's see what happens. I have some data points here to the upside, suggesting that the market could have an inventory imbalance. You have a prominent POC up here, and the move was very emotional. You have also a little double distribution. So let's see what happens at the open, and monitor if we go back into the range or not.